Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com, your leader in pure technical analysis, avoiding all that Wall Street hype. Today, Friday, September 19th, 2008. Well, the rally continued on Wall Street today as we're right in the midst of our turn date for the markets. We had mentioned about 2 days ago in the video, and you can go back and check it out, that our turn date was for Friday, starting on Friday approximately, for this market to actually put in a bottom and pivot to the upside. We actually did start a little early, so we were off by about half a day on that, but I hope you all can forgive us for that. In any case, folks, the turn date has come and gone at this stage. This is the move that we had been seeing on our calculations of our proprietary analysis, and it looks like this could have put in a near-term bottom for a while in the markets. Now, we are anticipating a little bit of a pullback consolidation on this move. Whether or not it happens Monday or Tuesday, that's up in the air. But after such a ginormous move to the upside, you have to expect a little bit of a contraction, consolidation. Now, that's a healthy thing to happen, and I think that's something important that we all have to remember, is that coming off of the move of the last couple days, if you don't consolidate, you're going to set yourself up for trouble. So it's important, and we are seeing that the chance of a pause, pullback, a little pullback, nothing crazy, but that type of event happening maybe Monday or Tuesday, maybe even for next week. Next week it wouldn't shock me to see us, flat to slightly lower on the week as a whole as we consolidate. Then we're going to look for more upside in this market, okay? So that's the general look towards the future of next week. I want to just touch on the few moves intraday because there was a lot of stuff going on today, guys. Starting again from yesterday's major move from the lows. The move from the lows yesterday to the highs today was over 200 and close to 250 points on the Nasdaq. That's unbelievable. I mean, you're talking about 10% in 2 days on indexes, major indexes. But the long story short, guys, what drove the market today was basically the elimination of the ability to short 799 financial stocks. Now, it's ludicrous in my book, and I don't really want to rant and rave on this and scream, but it's pretty amazing that they're putting these kind of shackles on the market. A market is supposed to be a free market. I totally agree that you shouldn't be able to naked short, but when you cancel all shorts together, what are you left with? You're left with buying. All right, not only that, but you're left with extra buying because all those that were short have to cover or are going to cover because of the major spike. Now, they didn't have to cover from what I know. It's not like if you were short you had to cover, but let's be honest. When Morgan Stanley jumps 50%, you're really going to stay in your trade? I mean, so it's going to cause you to cover, which is just massive amounts of more covering. So the idea here, folks, is that those people that are covering, they're not going to be able to go short again. Those that have the stock can obviously sell, but considering the amount of shorts needing to cover here and the fact that you can't go short anymore, it's just going to prop the market up. Now, in the near term, is it going to boost the market? Absolutely. We saw that on the last couple days. In the long term, is it going to cause the next bubble after the housing bubble? 2000, they dropped rates to 1%, which caused the housing bubble, which caused the commodity bubble, which each one's bursting, and we're seeing the effects of that. Is it going to cause the next bubble? Probably. But you know what? As traders, and I want to stress this, as traders, that's up to us to trade and see it and look at the charts and see it coming. We called the housing crisis, we called the commodity bubble burst, we called everything coming up here based on the charts. We're going to continue to do that in the future. Stick with us, stick with the videos. You'll at least understand what's going on and probably what's on the horizon as we give you all a heads up. Having said that, realize that we are going to be switching over to our new website, so the videos will be off YouTube on our new website coming on probably early to midweek next week. We'll give you updates every day in the video as it comes on YouTube, so you'll be okay. All right, now look at this market today. Futures up huge here. We're talking, this is the futures chart, by the way, the new contract, the ESZ8, the December 08 E-mini S&P 500 contract, and we look at the 10-minute intraday to get a good sense of it. And at this point, see these flat bars? This is basically lock limit up. The S&P futures were up about 64 points here, which is where they capped it initially until the open, and that's why you have this flat kind of, it almost looks like it was halted. All right, and at this point on the open, you had a major squeeze in it where it went up as high as 1290. 1290 was almost up probably about 80 to 100 points on the S&P futures, which is really unheard of. I've never seen it personally. It's just unbelievable action, guys. You can see the immediate sell-off that ensued from that height, and we basically started to trend down. This is profit-taking, 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 as any normal investor would sell into that strength on that pop and take some profits off the table. At that point, you basically stayed in a range the rest of the day. All right, the markets did have a nice little boost into the lunch hour as volume lightened up. Notice the volume here, sell volume, profit taking, and short squeeze volume, obviously. You get down to this point, then also you had options expiration today. We always talk about the major volume and the whipsaw of options expiration week. Today was the number one view of that volatility. All right, we have never had a week like this on options X where it's been like this, in my opinion. So it's a great explanation of how wild it can be. So always remember that every month, options expiration week is notoriously volatile. We coined the term whipsaw Wednesday, and again, Wednesday was crazy alone, but obviously the whole week was crazy this week. But again, so you have all the options and contracts getting taken care of here. Short squeeze at the open obviously was a lie that the volume was so big. You get all that out of the way, and then the volume pretty much dies out relatively compared to the last few days. Yesterday we did over 5 million contracts on the futures. Today we did about 4 million. So you can see the volume lightening up. The market needs to pause. I mean, this is exhausting. This is like running across the country from New York to Los Angeles without taking very many breaks this week. You got to take a little breather. We'd like to see a little consolidation, maybe either Monday or Tuesday, we'll have to see. And again, really a pause next week would be ideal for this market. We're going to flip to the daily SPY chart and take a look. And this is a great chart to look at because I want to show you. Number one, we obviously talked about the bullishness of the yesterday's move off the lows. You have a nice tail there. That's a very bullish sign. In addition, you basically closed right on the resistance line, which was a good sign as well. Look at that. Your close was right here, which was right on or above the line. In tune with that, you saw the move up today. Now, the key about this move up today, why, let's say we gapped up where we did, what would tell you to maybe take some profits there from a chart standpoint? Let's talk about that. Number 1 and 2, we talked about this resistance point yesterday. The 20 and the 50 moving average. Go back in yesterday's video and scout it out if you want. You can see we talked about this as being a major resistance area. We gapped right up into it. You gap up into a major resistance level, you may come down a little bit off that and consolidate. That's not a bad thing to do. It's a healthy thing, but the smart thing, obviously, for short-term traders, and I'm speaking for short-term traders, swing traders perspective, is to take some profits there on that gap up. You know it's a big move. I mean, from here, all right, from the lows here to the gap up price of right here, we're talking about a move on the S&P from like 114, under 114 to about 126 to 127. That's huge. All right, so in tune with that, that's such a big move in about a day and a half. You want to take it off the table and protect some profits. In addition, notice the volume surge yesterday. We harped on this volume surge yesterday as being a key about a possible a near-term bottom. And when I say near-term, it doesn't mean that we're going to just say all of a sudden going up. That's not exactly what we're saying. We're saying near-term, meaning over the next few weeks, we expect the market to trade higher off of this. At some point, we may retest that. We're going to kind of analyze the charts. We only really look about two weeks ahead of time here. And in the next 2 weeks, it does look like consolidation and maybe another push up. Maybe as high as this area, all right? This is a big resistance area that we've talked about going back probably about a month in the videos, all right? When we were trading up here, this was a channel we were in until we broke out of this channel, all right? I can even draw that channel in so everyone can remember it. This is me drawing it in rough, but you can see what we're talking about. Then we broke out of the channel and failed. Now we're right below that channel, and you look for consolidation, maybe a break of the lower end of that channel and a move to the higher end of that channel. At that point, we'll obviously reevaluate. But again, looking for a little bit of consolidation next week would be a healthy thing, and we'll continue to follow it. Nasdaq, let's go to the Nasdaq daily. Same thing here, all right? You have the lows here on the Nasdaq yesterday, a beautiful tail on heavy volume. You gap up right to the 50 moving average, and you close all the way below the 20 moving average. Still a great day on the Nasdaq, up 75 points, but it's important to realize that you hit some key levels on the upside. And that's the point where you're supposed to say to yourself, let's not get too greedy here. It's a short-term market. It's been a short-term trading market. Take some off the table and move on and look for a re-entry on a pullback. All right, and obviously it's pulled back a little bit towards the end of the day. Now you have this big gap in the markets, which is going to be very interesting to note, and something that we'll have to watch. Obviously, this gap, does it get filled at some point? And we'll have to look at that as well. Today, folks, crazy day in the sense of big moves. The financial stocks really unheard of. Morgan Stanley, for instance, you're talking about Morgan Stanley yesterday being as low as down here. What price was this? Around $12, $11.70. It gapped up as high as $33.86 today. Okay, that's the high of the day. So from $11 yesterday to $33 today, unbelievable. You're talking about 200%. Up on that stock from the lows, and that just shows you how unbelievable it is and amazing this market has been and wild. All right. So again, we're going to look for that consolidation next week. I want to just take a look here. Also, Goldman's chart's amazing. You can see here it was as low as about $85 yesterday, as high as $145 today. The last thing I want to touch on, guys, about a week or so ago, we warned a major turn in the dollar. We called the dollar for a decline, as it had hit this key level. Obviously, you guys know we called that back then. So since then, it had come down. In tune with that, we kept on talking about a bounce in gold and the dollar. Let's take a look at the GLD. This was where the GLD, when we called the bounce in the GLD, look at the spike on the GLD from 71 all the way as high as 80. What was the high yesterday? I don't know. Let's see. 90. That's a huge move. A great call on our part there. And also, I just want to touch upon the USO. Also, look at the dollars. The dollar's gotten weaker. The USO's had a nice little move up from basically a move as low here as 72-ish all the way to a high today of 83. So you can just see there the calls, and that's what you're really focusing on. This is chart analysis, no Wall Street hype. We focus on the basics. Stay with us when we move to that new website. You guys will love the new website. It's amazing. Join this chat room, fantastic chat room, and the Swing Trade Alerts, folks. We'll talk to you all next week. Take care.